The idea of this video originated from a casual conversation. The other day, my colleague, the company's HR, and I were having lunch. We were discussing the recent GST rate cuts. A colleague of mine was quite excited about the reduction in GST on cars from 28% to 18%. This would result in additional savings, so he felt that it was the right time to buy a car. But then the HR wondered why buy a car when it could be leased from the company. He reminded us of company's car lease policy and how it can lead to even higher savings. He added that he himself had been driving a car lease through the company's car lease program. Furthermore, the benefits extend to the new tax regime, so most employees can take advantage of it. Hello and welcome to ET Money's YouTube channel. Car leasing via your employer is a less explored, less understood way to own a car and save taxes too. The new regime offers few tax saving avenues, making it a really worthy option to consider. Now in this video, we will discuss how car leasing via your employer works, how it helps you save tax, and how it compares when buying a car straight away. Now this video belongs to our playlist on taxation. You can explore the link in the description to watch more related videos and learn about the other ways you can save tax in the new regime. Okay, let's first talk about how car leasing through the employer works. Companies offer car leasing facilities to their employees, often via tie-up with a car leasing company and a financial institution. You are allowed to choose the car you want subject to the applicable limits. Now the car leasing company acquires the vehicle funded by the financial institution and hands it over to you. When you start using the vehicle, your employer deducts a monthly rental fee from your salary and pays it to the car leasing company. Now this rental is based on your estimated annual kilometer limit or mileage. If you exceed your annual kilometer limit, you will need to pay a penalty. Now the monthly rental also includes the cost of insurance, road tax, and charges for fleet management or car maintenance services if you have opted for them. If you have opted for a car lease with a maintenance services, it is called a wet lease. And if you have opted for a car lease without maintenance services, it is called a dry lease. Now the car lease typically lasts from 3 to 5 years. After this period, you can either return the vehicle to the car leasing company or you can buy it at the residual value. The car lease can also be terminated prematurely as per the terms outlined in the contract. Partial or total damage and theft to the vehicle are dealt with as per the contract terms. So, this is how car leasing through your employer works. In essence, car leasing helps you own a car easily without making any large upfront payment. You also get bundled insurance and fleet management or maintenance services, so it's quite convenient too. However, car leasing programs come in all shapes and sizes, so check with your company's HR for the actual details of its car lease policy. Next, let's see how car lease via your employer can help you save tax. But before that, here is something important. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is 10.75% and there is no fixed EMIs. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. But wait, there is more. A special offer is currently live, and if you set up your loans against mutual fund account during this period, you will just pay 9.9% per annum for the first 3 months. So go ahead, check your eligible limit on the ET Money app. The tax benefit of leasing a car via your employer comes in two forms. First, the monthly lease rental is deducted from your pre-tax income, helping lower your taxable income. Second, you can also claim a deduction for fuel, maintenance, and the driver's salary by producing the required proofs. Now, your organization can cap these two at a certain maximum, so do take that into consideration. For instance, the table below shows the limits for cars lease rental, fuel, and maintenance and driver salary. Now, these perquisites or perks are not completely tax-free. The taxation is governed by Section 17 of the IT Act, which deals with taxation of perks. Now, under this section, if a car is used partially for official duties and partially for personal use, and the employer bears the expenses or reimburses them, a flat value is taxed as per the engine capacity. For a car with engine capacity up to 1.6 liters, the perks are taxed at 1800 rupees per month for petrol or diesel and 900 per month for the driver's salary. That's 2700 for a month or 32,400 yearly. The perks are taxed at 39,600 yearly for a car with an engine capacity of over 1.6 liters. So, to avail these benefits, you will need to get your salary restructured in such a way that there is a component of car rental payment and another for fuel, maintenance and driver salary. Now, when your company offers a car lease program, that shouldn't be a problem. Quite obviously, you will see the car being used for both official and personal uses. Now, as discussed, even if you are in the new tax regime, you can avail of these benefits as they are structured not as exemptions or deductions, but as expenses and reimbursements. Okay, let's now get into the operational details of this in the next section. And you can see how car leasing helps you save money via simple calculation. But before that, if you have found this video useful and would like to watch more such videos, please subscribe to the channel. And don't forget to press the bell icon so never miss a video from us. Let's consider a person with an annual salary of 25 lakhs and a 10% increment rate on that salary. Because the new tax regime is now suitable for most people, this person has also opted for it. Now he wants to buy a car with an on-road price of 10 lakh. He can buy this car straight away or he can opt for the car leasing program at his company. Let's first see what income he is left with for the next 3 years if he buys the car straight away. In the first year, his income is 25 lakhs. He pays a tax of about 3.2 lakhs on it and uses the remaining amount to buy a car. He also pays 3 lakh in petrol and maintenance during the year. This leaves him with a net income of 8.8 lakh in the first year. In the second year, his income has risen to 27.5 lakhs. The tax on his income is about 3.98 lakh. Since he has already purchased the car, he doesn't have to bear that cost now. The cost of fuel and maintenance has also risen by 10% to 3.3 lakh. Now all these leave him with an income of 20.22 lakhs in hand. Finally, for the third year, he is left with 21.78 lakh. Now, if you add up the incomes he has been left over the last 3 years, that's about 50.81 lakh. Now, let's consider the scenario where he doesn't buy the car upfront but instead opts for the car lease program at his company. He leases the car for 3 years, after which he can buy the car at its residual value. Let's now see what income he is left with over the next 3 years. As we saw, his current income is 25 lakhs. But before the taxes calculated on his income, car lease rental and fuel and maintenance charges will be deducted from the income. We have assumed the overall cost of the car via lease rentals to be 25% more than the actual cost of the car. So it's 12.5 lakh in place of 10 lakh. In real life, it's also possible that aggregate lease rentals are lower than the cost of car, but the residual value of the car is higher. It will depend on how the lease contract is structured. Okay, so this 12.5 lakh rupee is distributed over the next 36 months in equal installments. So one installment is 34,722. For a year, the total value of all installments is about 4.17 lakh. The fuel and maintenance charges are also deducted from the income. For the first year, this results in a net income of 17.83 lakh. Now, as we saw, while fuel, maintenance and driver salary are treated as exempt perks, in their place a small token amount is taxed. For a car of up to 1.6 liters capacity, the amount is 1800 rupees per month for fuel and maintenance and 900 rupees per month for driver salary. Here, we have considered the car to be less than 1.6 liter in capacity and that there is no driver salary involved. So, for a year, the taxable value of the perk is 1800 multiplied by 12, so 21,600. The tax for the first year comes out to be about 1.52 lakh. This results in a post-tax income of about 16.32 lakh. The income in hand for the second year is 18.06 lakh. In the third year, the car is to be acquired at the residual value. We have assumed this to be 10% of the cost of the car or 1 lakh. Now do note that residual value is calculated on the ex-showroom price and not the on-road price. But for simplicity, we have considered to be 10% of the cost of the car. As discussed a little while ago, this residual value can be higher too if the aggregate lease rentals are less than the total cost of the car. This will depend on the terms of the lease. Now, after acquiring the car, the person is left with 18.87 lakh. Overall, over the 3 years, the person gets 53.25 lakh in his hand. This is about 2.44 lakh more than what this person would have had if he had bought the car upfront. Now, if we tweak some of the assumptions in this base case, car leasing continues to remain more lucrative. But do know that we are not suggesting that car leasing will always be better than buying a car upfront. The video is not about whether you should buy a car or lease it. The idea is to illustrate the tax benefits of leasing a car by your employer in the new regime. Now you can run the numbers as per car lease policy at your company and check if it is beneficial to you. Now, as stated earlier, car lease policies come in all shapes and sizes, and you will know the actual cost only when you do the maths. Again, the purpose of this video is not to discourage you from buying a car upfront. That has its own advantages too. It's simple and straightforward, gives a better sense of ownership, doesn't hinder flexibility, and carries lower chances of making an error of estimation. So, take your pick. And with this, we have come to the end of this video. I hope you found it useful, and if you did, please don't forget to share with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.